founder of TradeSpoon, and today we're going to have our weekly discussion of current market conditions and what to expect in terms of market analysis and in terms of opportunities in the market. Disclosures are very important. Please read them. If you're new to trading stock or options, I encourage you to pause the screen, read the disclosures, and visit the link on your screen to understand the risk associated with trading stock or options. Friday, we do have a workshop. Starts 9:30 Central, 10:30 Eastern. Please join me. This is an hour, 45-minute discussion of current market conditions and how to manage your portfolio rebalancing construction. All right, let's jump into Stock Forecast Toolbox, our neural network. Basically saying that still an uptrend after CPI data that came in a little bit harder than expected. We do have rates going higher, interest rate sensitive stocks are going lower, and Magnificent 7 are going higher, and Spiders is also higher, almost 1%, retesting all-time highs 520. In terms of positioning, right, if you look at the Spiders, we're approaching options expiration, which is important date, right, triple witching expiration, not just for option trader, but I would say for stock traders as well, March 15th. We still have a pretty large positioning on Spiders, around 520 level, right? So the peak here is 520. So most likely by Friday, we're not going to get above that level. We have options expiration, we have a PPI data. So I would say 520 is your overhead resistance. And then all of these hedges will come out and expire worthless. And as delta decreases, the next positioning in terms of Spiders for April position, we have for 505, right? So we do have pretty significant amount of open interest by put buying at 505 level. So I think that's your support, 505. If you look at the Spiders chart, it's up 1%. 505 is the 2-week low. So we're at all-time high, 505. Expect volatility to stay, right? Because interest rates are still heading higher. And approaching key overhead resistance for 18,420. So if the interest rates after PPI data or after options expiration is able to get above 200-day moving average, above this overhead resistance, then I think the pullback is going to be more meaningful, and 505 is your first support. Meanwhile, QQQ is up, semiconductors are rebounding, Magnificent 7 are rebounding from oversold conditions, and regional banks, small caps, and gold is underperforming. All eyes now on core PPI. We have triple witching expiration, and then we have Powell's conference. So probably again till March 20th, I would say there's still expect volatility in the market with the risk to be to the downside. In terms of short-term trading, we have ActiveTrader. Every day we publish different signals that target accidental petroleum, AIG. 1% target gain, 1% stop loss. I encourage you to view live trading room recording so you can see how I trade the stocks. I did trade accidental petroleum, was able to capture a little bit less than 0.5% and a little bit less than 1% in a short period of time. And that's the goal. That would be an example of how you would trade ActiveTrader. I encourage you to join us in live trading room to get more details. And we do have live trading room on YouTube every Wednesday. So tomorrow, 8:15, 1:55, hopefully you can join us. Okay, I think right now until March 20th, there's still expect more volatility in the market, especially if interest rates continue to rise on harder than expected PPI and potentially CPI. Thank you very much and have a great day.